Hey, this is Mike Swanson, the Wall Street Window. Uh, I've got some good news for you today. I'm seeing some confirmation that the rally in the stock market that we've been seeing for the past couple of weeks is the real deal. I'm seeing no evidence of a significant top in the market being formed. We saw multiple rallies, of course, that were big. One was 17% last year that failed. Those were bear market rallies. That's what you see in bear markets, sharp surges up, and then they top, and then you go to new lows, and it sucks. But we saw warning signs that bear market was coming in 2021 because the internals of the market turned down to form a negative divergence. They have since, though, turned up, which is, I've done videos explaining that's confirmation, but there's more confirmation today that I'm going to show you. I'm also going to show you two stocks that I own that look like they're in a position to break out. Good buy positions now for those that are good, interested in trading. One, in fact, is paying a 14% dividend. Both of these stocks are in leadership sectors. But let's turn to the chart. And what you're seeing here is an unusual chart. You may have never been shown before. It is the global Dow Index. It's 150 of the biggest companies in the entire world, not just 30 based in the United States, but 150 around the entire world. And what's interesting about this is that it's been outperforming the market, as you can see from the relative strength ratio plot on the bottom of this chart since August. In fact, it went through its 200-day moving average in this downtrend line you could draw back to January in December. When the S&P 500 did that towards the end of January, this did this in December. This began a new cyclical bull market before the U.S. stock market broke its downtrend line in the S&P 500. So the market rally has been led by markets around the entire world. We're in a global financial system. There's more to the stock market than the ARK ETF or the NASDAQ even. We're in a global financial system, and you have the opportunity to buy stocks around the world, invest in different asset classes, invest in other countries, diversify. That's the beauty of the evolution with trading platforms and the markets in general, is you have the ability to do so much. That's not self-evident to someone who just has a Robinhood app and loads it up and is shown crypto coins as the first thing on the screen, and then they click other buttons and they just show, here's 100 stocks other people own, and they were hot 2 years ago, now they're all suck, but here they are, and everyone's stuck in them. That's, there's so much more to the markets than that. But look, what is interesting about this chart is what you see on it is a simple consolidation that has been taking place for the past, let's say, 2 weeks. See the indicator, the Bollinger Bands indicator, that's the pink band enveloping the candlestick chart. It gets wide when volatility increases, shrinks when it comes together when volatility shrinks. That's typically during a period of pause or consolidation. This is in a position where those bands are likely to expand, probably starting next week. That would most likely mean that this is positioned to break out and rally. Now, there's ETFs in the same or even better position. For example, EWG is the exchange traded fund for Germany. You can see how the consolidation has been extremely narrow on this exchange traded fund, and it's up today. It's actually touching the upper 20-day Bollinger Band. This looks like it's going to break out and have another move up, a continuation move of the new bull market for Germany that started really in November. I own this ETF. I own many ETFs, a whole basket of them for various European markets. And the EEM ETF for emerging markets. Look at the ETF for Greece is just going up, up, and up. That's a bull market right there. Undeniable, runaway bull. EWI, which I also own, ETF for Italy. Look, it's breaking out now. It's already doing it. That makes me think EWG is going to do it too. In other words, we are seeing breakouts happening in our very front of our eyes. While the U.S. stock market is pausing, these markets are breaking out already. This one is, Grek is, the Greek stock market. These are breakouts taking place now in stock markets in different parts of the world. And these markets turned up into bull markets in November, basically 2 months before the S&P 500 did. In other words, let's stop back to say what's happening. The global financial system, the global markets began a bull market last year. Some of those markets are breaking out now after already consolidating. They began the bull market early. They're breaking out again. That's confirmation that, that's good for the United States stock market. The S&P 500 is going sideways. It's lagging those other markets. It's just what's happening. The U.S. stock market is not performing as well as these other markets I've shown you. It's really not performing as well as GDow globally, but that's all right. What those markets are doing is telling us that, look, we're not in the market environment we were in last year. And so the S&P is probably going to continue to pause. It's kind of lagging the action in these other markets, but this is not a significant peak. It's going to lag. I'd rather own these other ETFs, and I do. I don't own SPY, but I do own stocks of select sectors inside the United States market averages that are outperforming SPY. My philosophy is, if you want to beat the market, and that's my goal, is you want to be invested in stocks, ETFs, and sectors outperforming the market. So let me present you two in such situations. The first is Golden Ocean Group. It is a shipping stock, and you can see that it's now breaking out. It's been consolidating since September, and it pays a 14% dividend. I believe this stock can easily get to $12 or $14 over the coming months. My plan is to hopefully hold it for the entire year, get the gain in the share price, and collect those 14% beefy dividends. Combine the two together, I'm aiming for a 25% gain. That's fun. Let me show you another, and this is in the sector, by the way, outperforming the market. Another stock I own that's in this sector is Ship Finance International. Both these are foreign stocks, not based in the United States, but this one also pays a big dividend, around 8%, 9% or so. But it's not really in a good buy point right now. It's already rallied. It's already touching its September high. Notice this stock is on its September high in the S&P. And most stocks in the United States are not. But another sector that's been leading the United States market, are the casino stocks. Caesars is looking like it's in a position to break out of its December high, November high. I own shares of Caesars. There are some casino stocks just running away or already have. Wynn is one. Look, Wynn is up 7% today. I don't own Wynn personally. Wow, what a move. This is taking off. The casino sector is on fire, outperforming NASDAQ, outperforming S&P 500. Casino revenues grew as nationally around 10% last year. Look, I don't own Wynn. I wish I bought Wynn a couple months ago. I didn't. It's running away. It's a big move today. I don't play stocks, that are running up already. I feel like I missed the move. That's fine. Las Vegas Sands, similar story, just surge. One I do own, I don't own that. One I do own is Full House Resorts. But Penn, I own Penn. Penn might be still in a halfway decent buy position. It's going sideways still. It's sort of lagging in that industry. But Caesars is one of the more interesting ones at the moment. But look, honestly, I'm more bullish on this stock as far as the price appreciation. Caesars doesn't pay a dividend. I'm talking 14% dividends. And that's what I'm about. I'm about trying to buy stocks, sectors outperforming the market. The stocks have stable or growing revenues paying dividends. That's where the money is to be made this year. These are the type of stocks that have been leading the market since this rally began, and they're likely to continue to do that for the rest of the year. This is not 2021, and we're not going back to the market environment when interest rates were zero. When interest rates are zero, everything goes up. Speculative concept stocks fascinate people. But look, this is not the time to be buying Rivian stocks that are concept stocks or crypto coins, which are just like real gambles and speculations that you don't own a share of a company when you buy that. You can't get interest. You just go to a slot machine if you want to buy something like that. You got better odds. This it's just the way it is. I mean, it is. We want stability in the things we buy, and that's what's being rewarded in this market, and is going to continue to be rewarded. So that's what I want to share with you today. The global markets look healthy as heck, and that's a good positive sign for the U.S. stock market. When the bear market happened last year, it wasn't just a bear market for U.S. stocks, but around the world. Everything was falling. Some things held up and did okay from January last year to May or so, but everything slid really from the May, June for a couple months. But that's not where we're at. Almost everything around the world is actually going up, and it's the U.S. that's lagging. But we're getting confirmation today. I just showed you two stock markets that are breaking out as we're speaking. Wind breaking out as we're speaking. So it's fun. This is a good time to be trading, buying stocks, and holding stocks that pay the good dividends. If you like this video, hit the like button. I'm going to make another one. If you want to get the next video, you're new to my YouTube videos, hit the subscribe button, hit the bell next to it, and then YouTube will send you an alert as soon as my next video is up. And I'll be talking with you later.